please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
And let's see if Asia-Pac markets are happy, and they know it. Seoul and Tokyo have just started trading for the final wrap-up session of the week. And yes, everybody's in a much improved mood, aren't they? Nikkei 225 powering ahead 1% at the open, 240 points. Wider topics up a smaller quantum. Kospi is up a bit. So is the ASX 200 in Australia by 23. The Nikkei reporting that Toshiba's entered talks to sell its PC operations to Asus Tech of Taiwan, part of a broader restructuring as the company tries to raise funds. The paper says Lenovo of China also interested. But in the past few seconds, Toshiba says it has decided now not to sell its PC business. Oh well, what comes up will come down. Let's get to Matt in Sydney, but first let's get out to June in Seoul. Hey, June.
Hi, Bernie. The Korean markets are looking at a positive start this morning, continuing the gains that we saw yesterday on the Kospi. Kospi up about 0.5% to 25.45 points at the start this morning. And of course, the Korean won at 13-month highs against the US dollar. Slightly weaker today at 1,097 won. But again, the strongest that we've seen in a very long time. And this is, of course, coming on the back of an improvement in exports, but also the bilateral currency swap with Canada pushing the Korean won stronger against the US dollar. So that is something that the Ministry of Finance is watching closely. And also affected are the exporters on the Kospi. Let's take a look at the blue chips this morning. The stronger Korean won usually does mean a sell-off for the major exporters, especially the auto stocks. Hyundai Motor Group did see a very big sell-off yesterday. So today we'll also be watching the exporters as well. Hyundai Motors is still down today, down another % from yesterday's losses. And Samsung Electronics in the focus today, up more than 1%. They have started with their organizational restructuring, which included new executive appointments, and starting with 221 new executives that were promoted to this level yesterday, with almost half of them coming from the memory chip business and more than half of them coming from the R&D area. So in line with Samsung trying to find new growth engines through R&D, and Samsung says that they will soon be carrying out a complete organizational reshuffle, which includes departmental transfers of employees and also the integration of different parts of the 3 business divisions that they have in the electronics unit. So this already kind of started with the CEO, Kim Hyun-seok, heading up both the consumer electronics division and the visual display business. So a lot of functions will be merged together and simplify the organizational structure to make more efficiency. So a very strong start for Samsung Group shares this morning. Matt, over to you.
June, thanks very much. The Australian market has, of course, been up and running for an hour, and we've got the ASX 200 kind of underperforming what happened stateside in the expectation that we had for the market. We're up by around about 1/3%, 21 points higher, 5,965 on the benchmark ASX 200, 6,044 on the All Ords. Take a look at some of the big heavyweight mining stocks, though. We've now seen the likes of BHP Billiton, Rio Tinto a touch lower, and that is dragging on the overall market to the tune of around about 0.5% for both BHP and Rio Tinto. So the market initially called up by about 0.75%, likely to mirror that similar performance on Wall Street, but some weakness coming through for some of those resource heavyweights, keeping the market at bay. Let's give you a look at 2 stocks we're watching in the gaming space. We have had a decision out of the Australian Competition Tribunal with respect to this merger between TATS and Tabcorp. The Australian Competition Tribunal granting Tabcorp authorisation to acquire those TATS shares. Approval, though, is conditional on Tabcorp selling its Odyssey gaming unit, though, in Queensland. The tribunal saying that the merger will likely bring substantial public benefits. So we still await Tabcorp and TAT shares coming online. They were suspended from trade earlier on this morning. So, Bernie, as soon as we get these stocks moving, we will bring you the moves on the back of this news coming out of the Competition Tribunal this morning. Back to you.
Great. Well, I want to know more about TNT in this merger there, Matt. Okay. Let's winnow our way over to the U.S. Treasury market, where 2-year yields hit a 9-year high, risk appetite recovering. We actually had the flattest yield curve in some 10 years. Meantime, the dollar getting a bit of a lift after the U.S. House of Reps passed their tax reform proposal, 227-205, largely along party lines. The House approved a broad package of tax cuts that would cut the corporate rate from 35 to 20, collapse individual brackets, and add, say, $1.5 trillion to the deficit over a decade. The debate now shifts to the Senate, where it's going to be a lot tighter. You've got some Republicans already coming out against. It would be the first major overhaul of the tax code since 1986 under Ronald Reagan. That's no doubt one of the big topics of conversation at the Morgan Stanley Asia Pac conference. Sri is there for us for day 3, I believe. Sri, wow, this must be something of a record.
Good morning, Bernie. Well, you know what we're going to do, Bernie? We're going to do something a little bit different. I'm going to just set aside all the huffing and puffing that's been going on in the market about tax reform and the pace of Fed normalisation. Then we'll just bring the focus back to Asia and talk specifically about Japan and really just touch on this revival, if you will, that's been happening with assets in Japan, especially in the stock market, considering that the Nikkei is up 25% year to date. And economically, the picture seems to be a little bit brighter as well, with capital spending picker up. But there's some real questions about Tokyo, the capital, and how it's struggling really to stay relevant for the global financial services industry. And yes, we have seen this proposal, haven't we, about tax breaks and a special economic zone in some parts of Tokyo to lure big business and the big international banks back. But is it working? We will talk to Keiichi Adetomo from Consortium for Japan International Asset Management Center Promotion about that and whether 2020 Olympics in Tokyo is going to help Bernie. And then we'll take the conversation to India and we'll talk about the efforts there to digitise the economy. We'll do that with Anil Agarwal, the head of research at Morgan Stanley, head of financial research for Indian financial at Morgan Stanley. And remember, there are some teething issues, but the important point here, Bernie, is that if the Modi government does get this right, Morgan Stanley believe that this is going to be a multi-trillion dollar with a T opportunity, investment opportunity. So we'll stress test how Indian government is really moving ahead with its digitisation efforts at the Morgan Stanley Asia Pac conference. Back to you now.
Oh, Sony getting a little action today in Japan. The Nikkei reporting the company, the electronics giant, lifted their full-year outlook twice by a total of 10.5% to 4.2 million units. I'm assuming that means PlayStation game consoles, but anyway you cut it, nice move there today. And Asia markets are looking very happy. It must be the beginning of the weekend or just about, because that's what it looks like right now. Yippee-yi-yay. And feast your eyes on the Nikkei there, 22,574. Stefan Hofer here from LGT Bank Asia. Morning, sir.
Morning.
Okay, so I thought that this move in the Japanese market had ended the last few days.
Right.
It's just kind of treading water, and
Right.
now we're back in business today.
Yes.
Are we back in business? I guess that's the ultimate question.
Yeah, so this is really the question that most investors have when we think about the equity bull market that's basically been running for well over 100 months. Japan is, of course, a big part of that. But I think really, to be fair, we've had an excellent earnings season. Japanese corporate earnings were rising in the high single digits. Europe also did very well, outperforming the United States. So, if you believe in ultimately what really counts as earnings, then these kind of market moves are very justified. Mm-hmm.
What's really behind this, though? It's not Abenomics. He hasn't done anything on that front.
Well, okay, so I think to be fair, though, that sort of elusive third arrow of Abenomics, the sort of structural reform, that's actually beginning to come into play. Companies in Japan are becoming a lot more shareholder friendly. They're increasing dividends, they're increasing share buybacks. That did not happen in the early stages of Abenomics. The early stages was about fiscal and monetary. Now we're seeing corporate governance improvements and so on, which is really very shareholder friendly, and that's what people are looking for.
What kind of industries do you think are going to see the light of day, are going to be durable ones? I mean, longer term plays.
Yeah. Well, I mean, the other thing, of course, is that the Japanese market is still very much about a yen depreciation story. So we still have a depreciation bias in the yen that helps the exporters. That's really the first port of call for most investors looking for the rebound in the export sector.
You think it's going to depreciate further? I thought that people thought that the yen was wildly overvalued by 15–20%.
But I mean,
undervalued 20%.
Yeah, but now that we have this positive moves in the United States with tax reform slowly but surely working through the pipeline, that's dollar positive, and that will help the Japanese on the other side.
Mm-hmm. Europe. Let's talk about Europe here for a second. Isn't this Brexit unknown, and whether companies are really going to relocate jobs to Frankfurt? I mean, that's a lot of this is just guessing, right? At this point, is it really possible to get a clear picture about Europe at this point?
Well, no, I think I would take it a little bit more seriously than that. I mean, the longer-term outlook on this is still that you'll have a UK which is separate from Europe, and that will have its clear consequences. slowly but surely companies are reacting to that. You see that not just in finance, but also in manufacturing. Companies are talking about their CapEx plans and really sort of some major questions there. So the funny flip side of this is that weakness in the pound is basically the main sort of compensation or the safety valve that the UK has. The pound can weaken, and that will actually boost the export sector, exactly what the Japanese story has been about. So what basically you could have here is a Brexit with a weaker pound and a British stock market that does actually quite well.
Do you, there's talk that Theresa May is going to, for $20 billion, offer it up as bait, to the EU. Is this going to solve all the problems in the world for them?
No, it's not. No. I mean, this is way more complex than simply the divorce bill. I mean, there's all kinds of new regulatory agencies that the UK has to set up. There's things like the border with Northern Ireland and the Republic of Ireland, and so lots of minutiae that are still far away from being clear.
Within Europe,
yes.
Have you broken it down by country?
Yes.
You have?
Yeah. So, I mean, our one market which is maybe a bit of a contrarian move still is actually Spain. The recovery in... Yes, absolutely. So the Catalonia story is beginning to fade, and what you have left over is an economy which unemployment is declining at a very rapid pace. The real estate market is coming back. The Spanish economy is actually doing extremely than that. So it's one of those markets where a lot of investors, especially in Asia, have been unwilling to sort of go near it because of the Catalonia issue, but actually we think it's a hidden gem.
Yeah, I mean, this is one of those situations you want to take an extra look at, right? It's like, okay, they're going through a mess right now. It's not pretty politically, but this kind of stuff historically has represented opportunity if you look at, if you gauge it very, very correctly.
Yeah.
Now, let's fast forward to the end of the year. It's like a 150% sure thing that the Fed is going to hike once. This year, among the many. And Yellen made this comment the other day that perhaps there are too many disparate voices in the Fed, which confuses the whole thing. I've never seen a central bank like this. They just cut loose their people, to mouth off at every speech opportunity in the world. But this guy, Williams, I think he's San Francisco, if I'm not wrong, he says the Fed should raise rates to about 2.5% over the next couple of years. I think that's completely 100% mainstream, isn't it? Fed funds, 2.5%? Or is that above?
No, I think it's fair. I mean, the Fed will, still move at a very gradual pace. I mean, we still have, and I think in terms of investors, what is really important is to be looking at the slope of the yield curve. That's still positive. There has been a lot of discussion recently in the market that that's been sort of shrinking, but it remains positive. So it's a fairly normal environment. The Fed is hiking rates for very good reasons. Unemployment is at the full employment level or even below that. Inflation is slightly creeping up. I don't think this is something to be overly concerned with.
Yeah, I mean, it's not like inflation is building up like a spring-loaded mechanism or anything like that.
Not at all.
I mean, the PCE doesn't show a darn thing right now.
And we are living in a world where the Phillips curves is basically flat. And it's been flattening gradually over the decades, so starting in the 1950s and all the way now down to where it is today. The big question for a lot of people in the market is there, at the end of the Phillips curve, does it all of a sudden shoot up like this? And so are we at a dangerous trigger point? That's something that some people are definitely worried about. In our view, no, that we're at still a very comfortable level at the flat side of the Phillips curve.
I think it's kind of like the end of the loop on a Hot Wheels. It kind of goes like that, something like that. More gradual ascent or something.